Hello, doctor. I'm from Group 9. My name is Desigan Kisewakuma. My matrix number is 824829111. Today, our group will be presenting financial ratio of Upsang and Oriental food industry. Before we continue our group presentation, I would like to introduce my group members: Alia, Natasha, Aaron, Mohammad Fitri, Pavitran, Ainur Shafiza, Muhammad Irfan, Nivashini Devi, and myself, Desigan.
Good day everyone. For our group presentation, we will be sharing an overview of Hapseng Industries Berhad, a well-established Malaysian company in the biscuit manufacturing industry. Hapseng is widely recognized for its flagship product, the Hapseng cream cake crackers. Other popular brands under the company include Cup, Bing Bong, Chips Plus, and other biscuit varieties. The company is publicly listed on the main market of Bursa Malaysia. This demonstrates its commitment to transparency and maintaining a trustworthy corporate image. Hapseng places high importance on product quality. It is certified with ISO 9001, HACCP, and Halal, and its manufacturing process are efficient and consistent. The company has an impressive international presence, exporting to countries like Singapore, Hong Kong, Indonesia, China, and the Middle East. As part of its CSR efforts, Hapseng focuses on environmental conservation and supporting community welfare. Lastly, the company maintains a strong reputation by blending tradition with innovation to stay competitive as a leader in the snack and biscuit industry. With strong product quality, wide market reach, and responsible business practice, Hapseng continues to be a trusted name in Malaysia and beyond. Now, let us introduce another major player in the Malaysian snack food industry, which is Oriental Food Industries Holdings Berhad, commonly known as Oriental. Oriental is famous for its popular snack brands such as Jager, Suprings, Rota, Zest, and Fudo. These products are designed to appeal to a wide range of age groups and cater to various consumer preferences. The company is publicly listed on the main market of Bursa Malaysia and is known for upholding corporate integrity and transparency. Oriental maintains high quality standards and holds certifications such as ISO 9001, HACCP, and Halal. It also makes use of advanced technology to ensure efficient and sustainable production. Oriental exports its products to more than 60 countries across Asia, the Middle East, Africa, the Americas, and Europe. This demonstrates its strong global presence. The company places great emphasis on customer satisfaction, innovation, and sustainability. It actively adapts to evolving market trends to stay competitive. Over the years, Oriental has strengthened its position as a trusted and innovative leader in the snack food industry. In summary, Oriental continues to grow its reputation globally through its diverse product range, commitment to quality, and focus on sustainable and innovative business practice.
Hi, Assalamualaikum. I'm Ainur Shafiza binti Abdullah Jamil with matric number A24B3752. Today I want to discuss about ratio analysis of two company, which is Oriental Food Industries and Hapseng Industrial Sendirian Berhad. First, in terms of current ratio, Oriental Food Industries demonstrate a stronger liquidity compared to Hapseng Industries Sendirian Berhad. Oriental Food Industry current ratio remain high, rising for 3.3 31 to 3.75, indicating a strong ability to cover short-term obligations. Its quick ratio also increased steadily from 2.35 to 2.80, reflecting a good financial health even without relying inventory. Net working capital show consistent growth, reaching RM149.99 million in 2024. In contrast, Hapseng's current and quick ratio were lower, and its net working capital declined to RM66.1 million by 2024, suggesting tighter liquidity. In terms of activity ratios, Hapseng outperformed Orange for industry in asset efficiency. Hapseng maintained a higher inventory turnover ratio, rising from 8.25 to 8.78 times, indicating faster inventory movement. It also had a strong fixed asset turnover ratio of around 4.47 times, and its total asset turnover remains stable between 1.52 and 1.58. However, its account receivable turnover was consistently low, implying slower collection from customers. Orange food industry, on the other hand, had a slower inventory turnover but shows stronger receivable turnover, peaking at 12.05 times in 2023. Its fixed asset turnover improved to 3.47 times in 2024, though its total asset turnover slightly declined to 0.91 times. In profitability, Hapseng demonstrates superior performance overall. Its gross profit margin increased from 24.60% to 31.13%, while net profit margins stay consistently strong at 12.02% in 2024. It's also achieved a high return on asset of 29.38% and return on equity of 35.17%, reflecting efficient use of both assets and shareholders' funds. Oriental food industry improved in 2024 with a gross margin of 20.65% and a net margin of 14.57%, surpassing Hapseng in net profit margin for that year. Its return of asset and return of equity also rose to 13.16% and 16.46% respectively, indicating improving profitability. Overall, Oriental food industry demonstrates a stronger liquidity and lower financial risk, while Hapseng show greater efficiency in asset use and a higher profitability.
Good day, everyone. My name is Desigan Anaraki Sivakumar. My matrix number is A24 A29 11. This slide presents the horizontal analysis of Oriental food industry from 2022 to 2024. We can observe that the company's liquidity slightly declined in 2024, with both the current and quick ratios decreasing, which indicates a reduction in short-term financial strength. On the positive side, efficiency has improved, especially inventory turnover, which increased sharply to 8.65 times, showing better inventory management. In terms of solvency, the company became less dependent on debt. The debt-to-equity ratio dropped from 27.8% in 2022 to just 17.56% in 2024, which is a healthy sign. However, profitability declined slightly. Net profit margin fell from 6.47% to 5.47%, and return on equity also decreased. In summary, while profit dipped a bit, the company shows stronger efficiency and better debt control over the 3 years period. Thank you.
Good day, everyone. I'm Nivashini here. Today, I will be present on the financial health of horizontal analysis of the housing industry during 2022 to 2024. So now, let's look on the improvement, which is gross profit margin, and declines, which is drop in net profit margin. Although they are selling with higher margins, they are keeping loss of it as profit. It might be because of possible cost or tax issues. In summary, the company shows the growth in gross profit and short-term health in 2023. The latest year, which 2024, saw a drop in efficiency, profitability, and rising debt. Thank you.
In 2022, Oriental Food had a better liquidity with higher current and quick ratios than Hapsang. Oriental also had more working capital. Hapsang performed better in inventory and fixed asset turnover, while Oriental was stronger in receivable turnover. Hapsang had higher debt ratios and better profitability margins. Return on asset and equity were also higher for Hapsang. However, Oriental had a higher price-earning ratio. In 2023, Hapsang's liquidity improved and surpassed Oriental in both current and quick ratios. Hapsang had more working capital, but Oriental led in inventory, fixed asset, and total asset turnover. Hapsang had lower debt, while Oriental showed stronger profit margins and higher returns. Hapsang price earning was higher than Oriental's. In 2024, Hapsang maintained stronger liquidity and higher working capital. Oriental led in turnover ratios and had a very low debt. It also recorded higher profit margins, return on assets, and return on equity. Hapsang, however, had a higher net profit margin and price earning ratio.
Okay, moving on, we have advice on sources. Number one, we have used brands strength to advantage, which leverage strong brand image. For example, Hapsang, they created a cream crackers and Oriental food creative snacks. Secondly, is attract better financial deals. This is for the brand strength to advantage. Number two is strengthen digital presence e-commerce channels. They expand market reach through online presence, and they also direct customer engagement. Number three is focus on strategic partners, form partnership to support business growth. They collaborate with established and companies. Number four is investment in research and development and food innovation. They both companies stay competitive and meet changing consumer trends. They both develop health conscious product. Uh, Number five is strengthen digital presence and e-commerce channel. They support business expansion through government funding, Hubside and Oriental Food Industries. Uh, they also access grants aim at food manufacturing. Both company access grant aim at food manufacturing. So that's all from me. Thank you.
Now let's talk about sources of fund that is most suitable to meet their objectives. Let's start with equity financing. This basically means the companies raise money by offering shares to new investors. Since both are already listed on Bursa Malaysia, it's easier for them to attract investors through IPOs or private equity. What's great about this method is they don't have to pay the money back. Investors earn through dividend and are invested in the company's long-term success. Next is debt financing, like taking out bank loans or issuing bonds. These allow the companies to get the cash they need while still keeping full control. On top of that, loan interest is tax deductible, which help reduce overall borrowing costs. Another great option is government grant and subsidies. The Malaysian government, through agencies like MIDA, offers support for things like export expansion and technology upgrades. These funds don't need to be paid back, but so it's a smart way to grow without adding financial pressures. Finally, there's retaining year earnings, which simply means reinvesting profits the company already made. It's a low risk way to grow, although the amount available might be more limited compared to external funding. In short, By using a balanced mix of these four sources, equity, loan grant, and profits, both company can grow steadily and stay financially healthy. Thank you.
Hello everyone, my name is Aaron Alki Vincent and my metric number is A24A3285. Today I will be presenting about the conclusion for this assignment. Hapsang Industry Berhad and Oriental Food Industry Sdn Berhad are two food and beverage companies operating in Malaysia. Let's start with Hapsang. The company shows strong profitability with higher gross and not net profit margins compared to Oriental food industry. This means Hapsang is more effective at turning sales into profit. It also has higher fixed and total asset turnover ratios, which indicates that the company is efficient in using its resources to generate revenue. However, one concern is its high debt to equity ratio. This suggests that Hapsang relies heavily on borrowing, which could be risky in the long run. On the other hand, Oriental Food Industries shows better short-term financial health. Its current and quick ratios are higher, meaning the company has enough liquid assets to meet its short-term obligations. Oriental also offers a more diverse range of products compared to Hapsang, which mainly focuses on biscuits. This variety helps Oriental reach a wider market and reduce its risk of depending on just one product or market. However, Oriental has seen a drop in inventory turnover and asset utilization, which indicates room for improvement in its operational efficiency. In conclusion, Hapsang excels in profitability and efficiency, supported by its strong brand reputation. Oriental Food, meanwhile, stands up for its liquidity and product diversity, giving it a strong position in broader markets. Both companies have the potential to grow, but they need to address their individual challenges. Hapsang with its debt levels and Oriental with its operational management. Thank you.